Okay, as we enter a brand new day in trade, let's take a look at how the global cues panned out. And it was a very choppy session for the USA, a sharp reversal from what we saw day before yesterday, where the Dow surged 600 points, the Nasdaq gained 3%, the S&P was up over 2%. Yesterday, again, the Dow was down over 1%, S&P was down over 1%, Nasdaq lost 2%. All three indexes really popped yesterday. The choppy action came as tech continued its weakness and recent downward trend. Facebook, Apple, Amazon, Google, Microsoft all closed sharply lower yesterday in the US. One glimmer of hope, though, is that Dow futures were at least up 58 points earlier this morning, or 0.2%, and S&P and Nasdaq futures were also up around 0.2%. Asia obviously trading weak on the back of this, and we over here for the Nifty might see some weakness too. But the Nikkei is currently down 0.11%. The Topix is up down 0.15%, excuse me. The Kospi is down 0.32%. Australia is down 0.73%. Softbank over 1% drop. Sharp falling nearly 3%. Samsung dropping nearly 0.2% in Korea. So Asia definitely feeling the weakness as well. The European stocks closed lower yesterday as well. This is because the European Central Bank kept the rates unchanged. They believe that the economic outlook is very grim right now, but the recession won't be as bad as they initially thought. The index, that's the stock 600, closed down by over 0.5% yesterday. Mining stocks over here were falling 1.5% to lead the losses. And then you had auto and travel and leisure actually bucking the trend. Auto was up around 0.6%. And travel and leisure shares were up 0.7%. Let's also take a look at the two commodities like we always do, oil and gold. Oil prices eased on Thursday. US data is showing a big buildup in crude inventories as demand is not picking up the way they initially anticipated. So according to the International Energy Association, crude inventories rose by 2 million barrels last week alone. So that's definitely going to hurt prices. Brent crude fell 25 cents or 0.6% to $40.54 a barrel. So again, for Brent, we're flirting with that $40 mark, which is a very critical support. WTI 75 cents or 2% lower, and that's well below 40 now at $37.30. Coming to gold, everyone's been wondering why gold has not been performing. We almost got used to gold performing just as well as the stock market. It seems that as the choppiness has picked up in the stock market over the last couple trading sessions, gold has definitely seen a sharp rebound. Up 1% yesterday, like I said. Spot gold up 0.7% to 1959, and then US gold futures were up 0.7 to 1967. So really regaining a lot of that lost ground. Of course, nowhere near 2070 and 2080, which is what we saw in the earlier months when the volatility perhaps was a lot higher. But nonetheless, it's been quite a good recovery for gold in the past couple of weeks as equity markets get increasingly choppy. So on the back of all this, we expect here our local markets might definitely face some pressure today.